Hello, everyone. This is me. I'm Guillaume with Brennan and Izzy here from the Panoptic team. This is the first week that we have the base trading competition, so we decided to do something special where we'll review the competition, the competitors, the biggest winners, the biggest losers. Typically, it's when we do this on Fridays, only one trade, but now we'll do it by trader, which is going to be a bit more fun. We can look at even at their history, where they panicked, which good trades they did, and more generally, kind of make it that you also, as a trader, can learn from the best, maybe learn from the worst as well. But yeah, I'm here with Brennan, Izzy. How are you guys today?
Doing well. How about you?
Yeah, kind of crazy morning, but it was fine. I made it.
A little tired. I stayed up late to watch the hockey. It was in overtime.
Who was
Vegas
playing? Oh,
and the Oilers, and of course McDavid.
he
hit the OT.
scored. Wait, you're a Vegas fan, or you don't?
I'm just a hockey fan. I love all hockey. I am a sucker for the Knights just because they were like a new team that opened, and then they were like a bunch of misfits because there was like an extension draft, and Fleury got pushed there.
So you're against the Oilers, against
Well,
Canada.
but then it's
I
like,
hate
I mean,
you.
how could you be against like McDavid and like the Oilers? It's like and they lost in like the heartbreaking like finals. I say, hey, I don't know. I'm just a fan. It's just like classic like McDavid just coming in and just
Yeah, people don't know, but yeah, Izzy is a big time hockey player, both in college and also recreationally. I feel
yeah.
it's
So,
it's
but it was
the
free hockey. It's free hockey.
it's
Know.
like yeah.
You
We
can
have
get
beer
out.
leagues in Canada where people just play a little bit of hockey. Is that right? You play in beer leagues, or is this something?
Yeah, I do one, but I didn't get to do it this year, so big bummer. So now I'm in the tennis beer leagues of Boston.
Or whatever, vodka seltzer. if you want.
Yeah, right. A little bit classier, you know.
Cosmo, tennis and Cosmos.
Yeah.
Let's do this. Um, all right. Yeah. So I think typically also I'm teaching Izzy a little bit how to manage her LP positions. We've seen a lot of market activity, but definitely the competition is, I think, more exciting for everyone. So yes, maybe Brennan take it away, and yeah, we'll have Brennan kind of be the MC, and then we'll try to add color to what he says. But yeah,
For sure. So we've spun up this competition, as you can see here on May 5th. We're about 5 days in. We've had some very exciting market activity over the week. We'll jump to this price chart here of ETH. I think the latest was we had a lot of talk on crypto Twitter about Ethereum lately and how poorly it's performing. It's been performing. There's a big episode on Unchained podcast with Tarun and Max Resnick, and kind of this viral clip circulating about how Ethereum as a business could consider or should consider blacklisting L2s that aren't providing kind of value back to the token. Anyways, all this kind of talk and
this was the bottom, like just to the minute, I'm sure.
Exactly. I don't know if it had to do with any of this. There's a Pectra upgrade on, I think, May 7th, closer to the morning time in the US time zone. And we kind of didn't really see any price movement after that Pectra upgrade. And then leading up to just, I think, yesterday and the night before that, there was a trade deal kind of announced between the UK and the US. And maybe that's what took off this market, some global optimism of a trade. Maybe it was something else. But we saw a huge spike in the crypto prices. I think the equities were a little bit more timid or mild of an increase. But for ETH specifically, we're seeing 27% gains in the last just couple of days, really. And that's almost hitting 2,400 now. When just last week, when we were doing this episode, we were under, I believe, 1,800. So big moves here. Any comments on why you think the price went up on ETH and Bitcoin this week?
No one knows. You can't predict. I think even the Pectra, it took a while, and people say, "Oh yes, of course it's Pectra," but I don't think so. It's just the.
I mean, I also think kind of lame, but like the acquisition, Coinbase, Deribit, like it's loose between crypto, but like it's bullish for the market.
That's
So,
true.
you know, gold is also spiking too to like crazy all-time highs, and they're kind of like sort of moving in tandem. Um,
The the same way we are trying to survive the downward moves, and no one knows. We just have to ride these.
or maybe just it was in spite of what's his face? Who was it? Gainsy's just
Oh,
absolute tear on Ethereum. Just while he's smoking a cigarette, just flipping out. I immediately was like, yo, delete
buy
my
signal.
video saying I'm bullish ETH. Delete my video.
No, I mean,
But it went 40% up since that
any
video.
attention is good attention. It could have been like anything, or someone that did realize that it was underpriced after seeing all the FUD. I don't know if
Yeah.
the market movers are on crypto Twitter that much.
It's
Yeah.
just one input in their models. I
Yeah.
don't know.
Well, I mean,
But no, let's talk about the Deribit acquisition, because that's huge for our space, us being an options protocol. So this was announced. I mean, it was speculated a lot, even in Deribit's own analysts' writings. We talked about this on the show, but it has gone through, it looks like, or at least it is going through.
Oh no.
That's pretty funny. I actually, it's weird. I think this is the year of the consolidation and acquisitions. I mean, it's just, which is a sign, I guess, of like a.
I mean, whoever, I think so. I mean, maturity maybe in
Yes.
the environment. I think like, those that survived the past 4 years, maybe ish, like they're there for the long run, and they're definitely Coinbase is one of the biggest kind of to emerge.
Yeah.
But yeah, I would agree with you. We should expect whatever startups do typically getting acquired and see this more.
Well, especially like with firms like Coinbase. I mean, I read somewhere too. I'm pretty sure Deribit is doing like 3x the volumes of Coinbase. Yeah. So I mean, great move on their part.
If they can offer this to US users as well, I think Deribit was blocking US users, so
they're Dubai-based company, I believe. So
I mean, even in this, yeah, I mean, we see that though they're trying to gain a foothold in non-US markets. Kind of quote here, not from Coinbase, but big leverage traders in Asia, Europe, a lot of non-US places, and so they're getting order flow. They're getting the market makers, I assume, that come with Deribit. They're getting the whole package, and now they have spot, futures, perps, and options. The only thing they don't have is NFTs.
they don't have perpetual options
or perpetual options.
So, I don't know if NFTs are still a big asset class, but yeah, that's the playbook of finance. You want to have a lot of these kind of under your umbrella. You have like even CME has futures, but options on futures as well, and some kind of cash secured products. But yeah,
no, it's pretty smart. I mean, who else was it? Valkyrie maybe, or Falcon X, who acquired Arbelos earlier this year too. It's just, it makes sense. So I think this will be the first of a few. And then there were the rumors of Ripple and Circle, right? Circle rejected it, I guess.
Yeah.
Their IPO. So
I mean, yeah, I don't know if Ripple. It benefits Ripple more than Circle, I'd say. But yes, for price, I'm sure they could have been a good score.
Yeah, but I think this will be the first of many. So that was my conjecture, I guess.
So who should Panoptic acquire then?
I don't know. I think we'd be more the acquisition.
You want to acquire me? I'm gonna acquire you.
Yeah, right. I mean, I could see us being like the on-chain options desk or something like that. But I mean, good sign for derivatives. I mean, like you're saying, it's a good sign for any sort of healthy maturity of a market, of an industry. You need to have the derivatives in the market and those markets there. So I'm taking it as a positive.
Well, the markets are agreeing with you. So let's look at real quick the stats on Panoptic. We are seeing this huge spike in volume, over $1 million in notional volume traded over just the last week on Ethereum mainnet. perpetual options on Panoptic. So big spike in activity there. We'll have to take a look further later. I'm assuming a lot of these are sold options right before the big price jump, and so potentially a lot of liquidity there to check out. And then we'll jump to the trading competition. So as you know, we are running a trading competition on Base to celebrate our launch on Base. So you can now trade options on the Uniswap V3 and V4 markets. So we have 2 pips pools running. It's the ETH and the Bitcoin V4 pools. And this trading competition is on the ETH pool. So we're running this trading competition for 2 weeks. And we've already seen a bunch of people join in and start trading some really cool positions, especially before the big market rupture this week. And so we'll be going over some of those traders and see what has been working for them, as well as what maybe hasn't been working as well. The prizes here at stake are USDC cash kind of prizes, as well as points. So we're giving up a total prize pool of $5,000 and over 5 million Panoptic incentive points, as well as this little guy. I don't know if you can see him here. I have him with me.
What?
Yeah, gigantic plushie.
Kept in his packaging and everything.
That's right. I'm happy it's still in its packaging. I was expecting. So is it supposed to be used like a body pillow, or it's just a super huge plushie? I know you're big into that, Brendan.
Yes, it's anything that you want it to be, because you can hardly wrap your arms around it. It's definitely not like a head pillow. I think it would break your neck. But if you have kids or if you're a collector, this is the Ralakuma kind of series. It's a pretty popular show with the bear, and it's really fuzzy, really soft, really plush. And it goes to the top volume.
Exactly. So if you're in need of a plushie, yes, the volume is one metric we wanted to emphasize as well, because it's a different type of risk, and you get exposure, and then you can be a bit more active, even though the returns may not go in your favor. It is definitely a way of trading that we want to reward. So yes, the $700 and a plushie and 1 million pips is the prize.
Or when the returns really go in your favor, you're making that much more.
Exactly. So the same thing, we have first, second, third, but yeah, the key point is that we want to have, even on the sell side, you may want to have a little bit more volume, less trades, but then go a bigger size, and that's kind of what we count there.
Yeah, really here with the volume, what we're looking at for the contender for this gorgeous bird here is Esh. This guy, I don't know, we should dox people, but they're public, right? They have an Ethereum name, but this
look at number 7. What did that? No, I'm kidding.
Oh, who's this? William Lambert. $2,000.
Yeah, most people have, so we do have the ENS, but yes, I like that people are using easy to remember names, so we'll know that Nicole Cameso is Charles Timax. If we see them around, then it's easier than a bunch of string and numbers.
This looks like a Coinbase name. onegirl.cb.id.
Okay.
But yeah, so if you want to take over this position, I was just looking at the cost of acquiring this plushie plus $700 and 1 million in points. You would have to trade 54,000 in volume. The way this volume works, so a little bit of alpha for those listening on the stream of how to overtake this volume leaderboard. If you open a position in the pool or you close a position, it should both count towards your volume. Whenever you open positions on Panoptic, you do pay 0.2% in commissions. That amount does not go to Panoptic as the exchange. Instead, it gets redistributed to all basically the liquidity providers who are passively lending in the Panoptic pool. So if you have a large position already in Panoptic, you're basically receiving back a large portion of your own commission fees. But assuming you have like very little slice of the pie and you wanted to kind of overtake this, you would need to open about $27,000 notional size position and then close it. And what would be the cost of that? It would be 0.2% percent times 27,000. So you can do the math. You can see what it would take to get to the top of the leaderboard here. Of course, there are additional prizes besides the plushie to kind of help you with the gas there. So we'll see what this spikes up to. We're only 5 days in. We've got, 9 days, 23 hours, 35 minutes, and 28 seconds left. So
quick, clock is ticking. And yeah, the volume is definitely it's easier to know the metrics and how to get there, but yeah, the P&L is definitely the one requires a bit more skills.
Well, yeah. So whoever's the most dedicated will probably win this volume. Let's go to the P&L then, and we'll take a look at some of the best and worst traders. Normally, we're looking at the trades. This time, we're going to look at the whole account. So, who do you want to start off with?
I mean, the P&L. This is annualized or since the beginning, or maybe can we get a grasp?
Yeah,
91%.
So here's the P&L. So we wanted to make this a fair ranking. So we're going to do a percent metric. So it doesn't matter if you're a big trader or a small trader. We really wanted to narrow down on kind of the best just percent trader. And so this is going to be as a percent of your total margin collateral in your account. As far as the actual values here, they're not annualized. These are literally what people have made in the past 5 days. So this trader's account has gone up in value by 91%. Okay. So if they put in, I believe actually this trader put in like $400 in collateral.
Yeah, let's have a look.
Their account should now be worth almost $800.
So we can spy. There's an arrow, but anywhere we click, it brings us to that trader's page, right?
A little bit. So if you do click on it, it'll pull up. But there's a little bit of some navigation kind of tricks you might need to do. So I'm going to pull up this page preloaded, and we kind of have this view as in the URL that you can spectate people. You'll see this big spectator badge once you're there. If you click them, you'll end up going to their kind of home page, which might be difficult to navigate. But if you go to the actual market page that you see someone trading in, this is the ETH USDC V4 0.05% pool. And then you attach this view as, you can actually spectate anybody. So a little bit trick here. If you want to see what the best and worst traders are up to, you can do this on your own time as well, instead of having to just follow along here. But we can take a look at kind of the positions that this Ohm has done. Just one simple position. So that's a
good. 2 days after depositing. I mean, depositing, opening one position and waiting had made them 91%. And we can see from the position, I know it's a long call, but you can also even look at this. But yeah, this is we do these where I try to guess. But yes, I would also guess that call buyers would have been the most impacted by the recent price move.
Yeah, the recent price move.
Could have gone the other way.
Yeah,
this one was lucky enough to time it almost to the dot. So yeah.
Yeah, so the price went up. We know 27%. Bullish positions would be something like buying a call option or selling a put option. So that might be confusing sometimes to new traders. Like, I thought put options, you do well when the price goes down. But that's when you buy an option. If you sell the put option, it's bullish. So we'll probably see some sold puts do pretty well here. In this case, we're seeing a purchased call do very well. And we can take a look at this position that was created by Ohm. I'm not sure if they're related to like Olympus DAO or if this is OMMM, but cool.
Olympus Market Maker.
Yeah, the Ohm Market Maker. So they are now market making Panoptic. We've got a nice call option here, almost one full contract size. So this is pretty cool. They're on 10x leverage pretty much. They put in $400 of collateral in ETH and USDC. They're taking out a position that is about $1,600 worth. But of course, they're only using about, I think it's a fourth or a third of their actual buying power. And so they could take out more and more positions here because the requirement is so low. They're trading on 10x leverage. It's only going to use a little bit of their margin slice. And we can look at their kind of overall portfolio and liquidation prices here in a bit. But this is a highly leveraged position, and the price started under 1,800 on ETH when they opened the position. The price is now, as we're talking live, over 2,300. And with a call option, it's going to start. They started nearly out of the money at about 26 delta, and they are now at an 88 delta. So on the way up, the more increase.
Oh, they're still in range?
They are out of range, so they're not paying any more premium as of now, and they're just benefiting from this price increase. And so they paid about 1% on the notional in premium, but earned over 20% on notional in the actual price movement. So this was a very good deal. Definitely, I think this is 0.6% on the notional in terms of premium. So much cheaper than you'd be paying on Deribit or Derive or some other kind of traditional options. With the perpetual options, it's a bit different. You get a streaming premium, so it's kind of like a funding rate. You pay as you go. In some cases, the funding rate is 0, specifically when the price moves out of the range of this underlying LP position. And so basically, they've got to purchase a very, very cheap option that has done very well here.
So what's the benefit of keeping
exactly.
this open? Just underlying price move, or should this person probably lock in there?
Yeah, at least if you're bullish, you're in the money. You own 0.88 ETH, which is again 1,604, only 163, so it's 10x leverage, like a perp maybe, and you don't pay anything. And I would say that that account should expect to be either forced exercised by who's on the other side, or something should happen. But if they are still bullish and they don't think it's going to go down, they can keep it up, keep it open. So the only risk now is the forced exercise risk.
So so they did purchase a call from someone who sold it, and this person sold, and they're probably deeply in the money. Which, as we know, if you sell call options and you become in the money, that's bad for you. So the person on the other side might want to close out and pay this person a small additional fee. Great for this person, but honestly, if you're this person, it's really like a question of, do you close out yourself and make a new position, or do you close out, lock in the gains, or do you keep it open and really hold your bullish position? Because at this point, as you mentioned, Guillaume, they're at basically almost like a 10x perp. They're at 88 delta, so it's almost 100 delta, which means it's almost like a pure perp.
Yep. I think they are at 100 delta because their contract size is 88.
I see. Okay.
Yes.
Contract.
Yeah,
they're at 100 delta.
We do show the delta on the cursor when you hover. For those out there, if you go in range, we also show that gamma, and that gamma is a different value, but 6,800 worth of gamma was in range. We can talk about gamma, I guess, another way, but you can also see some of the Greeks on that cursor when you hover.
Yeah, this is a nice addition. New feature here where you can see at every price point. So this delta is being multiplied by the actual effective contract size. So to note that it is basically a 100 delta position on 0.88 ETH contract. So effectively, they're just holding spot at 10x leverage. They're buying a perp at 10x leverage. So the question that Izzy posed of what should they do, it's really up to them. If they lock in their gain now, they're at the top of the leaderboard, 91% P&L. If they feel like someone else is going to mess up at this point, market's going to crash, someone's going to make the wrong trade, maybe they should just play it safe, close out, and call it goods. But if they're feeling a little bit more excitement, maybe they want to hold this open, thinking that the price, momentum will continue, the trend will keep going up. It's really
one thing to keep in mind is that unrealized P&L, look, there maybe $358 of unrealized, they haven't exercised or closed that position, doesn't count towards your collateral. If they were to close and now the funds are in their account, then now it counts for collateral. So I would also maybe not just for kind of protection, but also have this capital be available. They should maybe close, redeploy, or even if they close and redeploy, then that capital now that collateral counts in a way. We do this to prevent like manipulation and moving too much the price to increase your own collaterals. That's why the unrealized one aren't considered. But yeah, I would say that's another reason. If they want to trade a bit more, they'll have a much higher capital efficiency if they close this one, realize the gain, and move forward.
So your margin is only credited once you close this position. Then
yes, if it's a short option and you're losing on that short option, we count this as a loss, but not if you gain by buying an option. Or safety purposes.
Makes sense. It's a safety precaution for the protocol.
We go look at who.
Yeah, sure. Let's go see how this person's doing. Let me pull this.
There's no free lunch, so
I see the multiplier is the max. So what we expect that was either okay for the user and the reduced. I doubt this was open at max. So yeah, we can probably.
Yeah, so this person sold nearly 1 ETH contract, and the other person purchased basically as much as they could. There's kind of a restraint in the protocol that doesn't let you go over 90% of the available sold contract. And so they purchased as much as they could, and basically the spread is very high.
I think what's happening is that they sold more. If you look at the dates, this was likely, a reduced size to bring it up.
Oh, okay.
Because on the interface, we actually make it hard to buy at this max. We have warnings, and most people, I would say, would not be willingly paying 3x. So yes, this is likely the position was probably larger, but then they reduced their size.
Yeah, we can do a little spectating. So here's the account that sold the option to the ohm.eth that is winning the competition. And they have been trading quite a lot of positions.
That's the most volume one, I guess. So that's the...
Yes. We can't see the strikes. That would be a nice thing to see here on this page. But lots and lots of volume here. And they sold them this position. But the position's actually... the current position is actually in the green, technically. So not too bad here. It's not making any more fees.
Oh, I see. Yeah.
It hasn't made any fees yet.
No, but that's right. They probably realized their losses when they close or reduced. Anyway, so that's...
So you think that they realized they closed or reduced as much as possible rather than force exercise, and now they're getting paid
if it goes back in range. But in theory, it's also free or... But now they have a short position. This is another hedging, maybe. Again, the one position gives one story, but if you were to look at the whole portfolio, maybe it's a different story. And if you go back to the...
Yeah, so we can see the position that you're talking about that they closed and realized losses. They closed it about 5 hours ago. If we jump to that position, you're indeed correct that they did basically see the opposite P&L of that other trader. So the other trader paid $10 in premia. This trader earned $10 in premia, but because of the price direction going the wrong way, going in the money, they took on almost 22% loss here.
Yeah. So but if you look at the whole portfolio for that account, and the previous one, the buyer only had open positions on the left. Only had one position, which is a short call. This one, they have multiple positions, or at least 4 of them, but it all collapses to that P&L chart. So,
it's really nice to see because we can kind of see even their overall liquidation. So, looks like they're nowhere close to being liquidated anywhere. It's probably because they have
if it were to cross, we would show it, but now because there's no crossing point, they will never be liquidated. Even though they
if the x-axis continued on to a million, maybe it would eventually.
No, I mean the way I coded it, it would be if the price was really $1 million, it would show. But then now because it's not crossing ever, it probably goes up at the same time.
So no liquidation price effectively here because they have so much collateral. They're managing a lot of short option positions. One of them took that loss there.
Can you look at there's a hamburger menu on the right of that P&L chart?
Oh, let's check this out.
The include deposits. This is also a little bit the hidden part, but they have a bunch of ETH that I see. So they're still bullish regardless of maybe the positions P&L.
Yeah, so they have, let's see how much ETH deposited. I think 7.5 ETH deposited and 13,000 USDC. So actually a lot more. The ETH price is 2,000. So basically 50-50 here on their deposits. So yeah, that's interesting to see that they're kind of neutral in the trades, but because of those ETH deposits, they're essentially bullish. Which they have the choice, right? Of you don't technically have to deposit all this ETH. You could have mostly USDC deposits if you wanted to be more neutral overall, but
I mean, it looks like his PLP returns are also pretty high.
yeah, so I mean, this user is also generating a lot of the PLP returns because every time they open position, they're paying a 0.2% commissions to all the PLPs, which includes themselves. So they're basically getting back a lot of.
But this return is also annualized. So I would say that a week worth of active trading. Maybe it's going to sustain, and maybe yes, we do have the 60% APY, but we've seen it decay a little bit. The mainnet one, I think, are pretty stable. Each unit of capital trades in a way that is kind of consistent. But yeah, the first few days are definitely you deposit, you open a position, maybe you do nothing for like 2 weeks. So that's why there's a spike always of these APY.
Yeah. So there's a pool wide. So if you're a small depositor, you put in $100. People are trading large options in the thousands. This is going to be mostly beneficial to you, but it is kind of like a fee payback to you if you're the one trading yourself with large positions. So kind of a nice bonus there. Let's jump back to the leaderboard. And is there any other traders you want to look over?
It'd be cool if we'd be able to see. I mean, glad that someone did one trade and it worked out really well, and now they're at the top of the leaderboard. But it's nice to see when you have.
Maybe can you let number 2 what trades there is, because 50%, 54% in 4 days, 5 days is definitely a successful trade. Maybe it's also a call. Steve Flanagan, Steve from the team, actually, I know his trades. That's also maybe one we should look at, which is in that case a bit unexpected, but definitely kind of a winning trade. But yeah, let's look at 707.
Sorry, I think I cut out there for a bit. Do you see?
No, let's share the 707 account. Yeah.
Okay, perfect. Great. So this is going to be the 707. So you can take a look at their position. Also a call option.
This is fine. Yeah. So same as before. Maybe timing was a bit wrong, or the strike choice was a bit different, but the PNL of 54.4% is real. But yeah.
Well, let's take a look. Why did they okay. I think this trader actually did better position wise, but they took on a smaller position compared to their kind of account value, and so they were a little bit sizing wise, they were smaller, but they did very well in that trade.
Saying in terms of the leverage that they utilize.
So effectively, leverage is always going to be about 10x, but as far as the amount of just the position size overall, effectively was smaller compared to the amount of margin funding their account, and so they're going to see an overall net liquidation value increase that's smaller than the other trader.
Yeah, we do it. So it's margining. Margin accounting is different than leverage accounting, because at some point you can open a position on leverage and you choose that leverage. Here it's how much of your margin you're utilizing. But yeah, I would say they could have a 100x position, but then they use only 1% of their account. So that it does scale where the 1% did do better, but it was using less of the overall deposit. So yeah,
it was using less of the overall deposit.
Had they maxed out, maybe they would have been maybe 200%, even more. But yeah,
but dangerous because
no, but the fees actually, this might have been also purchased almost out of range too. So this was also one of those where directionally they were correct, but then they could have lost, but not necessarily liquidating wise if it went down.
Yeah, I mean, you're right. When it was purchased, the price was actually over 1,800. Yes. And they only pay when the price is below 1801. And so I guess the price crossed over a little bit, making them incur 9 cents in this option cost. But I mean, where on Deribit can you get a 9 penny option? You can't. So Obviously, there's equilibrium in play, but in some cases it's going to be cheaper, some cases more expensive. In this case, this is a very, very cheap option, nearly free, and with basically full delta exposure to the price going up. So great trade. They made almost $100 and paid less than 10 cents.
Give me, yeah. So let's the Steve I know has a different strategy, and then let's look at him before we look at the losing trades maybe. But yeah,
Sweet, let's do it. We'll pull this up. So Steve Flanagan.eth here, and we'll see what their positions look like. So they're a little bit bullish.
Currently abroad.
Say again?
Who's currently abroad?
Oh, like not. What do you mean? Like,
oh yeah, no, he's not trading from the US. He's Irish. I think he was traveling to Ireland when he
Yes.
traded.
I see.
If not, he broke the law, and then he will have to deal with the consequences.
He is.
Yeah, so this is
100%
put selling.
overseas.
Put selling are also a way to be bullish when the directionality works. In his case, I think if you go down, he did get paid quite a bit again for these. I mean, a little bit, not much, but yeah, he did get paid. That's the reverse of the call buyers, but yeah, he got most of his returns from that price appreciation using a bullish strategy, and the price is bullish. Then yes, you make money. But yeah, I think he might be more utilized, 46% utilizations. That's why maybe these gains are compounding to kind of top 3 level of returns. But yeah.
Can you click into one of these?
Yes, let's take a look at this.
The first one. Yeah, the other one is tiny. Oh my God, $2.
They've both made 10%.
Yeah, maybe so.
The test, maybe. And then he doubled down.
Pinching, $2 worth of collateral.
So this is him selling
Yep.
puts. Is that what you said?
And you can see from the price, the thin line is where it started. The dashed line is where it is, and definitely a bullish trade, definitely a bullish price move. So yes, he's making money on the exposure, on the notional value.
This is interesting. That's a much wider
So,
position.
yeah.
It's a 1 year put option, and so
He loves the 1 years. He loves a wide range.
To some extent, the 1 year is a good trade-off. I mean, not even a good trade-off, but you can be directional with a yearly time scale, and it can pay off in 5 days, 8 days in that case, and that's perfect. Like if he had a shorter dated, maybe he would have went past that range and not made as much. So you can be directional. You can still have that kind of price action generating returns.
I mean, this is essentially you taking out a super wide range
Exactly.
from Uniswap V3.
And if you look at the ranges between 982 and 4044, which is well within what it was for the past year, I'd say. So definitely in that year time scale. But because of the move, which is still 20%, he made 20% again. Oh, yeah.
Now, is most of this coming from the churn of the fees from the underlying
No, barely anything comes
Uniswap
from the fee.
position?
Most of it is the price move.
So he's starting out at closer
all from
to
the
a 50 delta position. So the price goes up 20%. He's going to earn closer to about 10%.
Oh, that's it. Yes.
That price gain. And yeah, just to
Right.
top it up, he makes a tiny bit on the side and some fees, but it's not much compared to the actual just directional movement. Now, if someone went and purchased this option from
Right.
him, then he would be making significantly more. Maybe he would have made $1 or $2, in fact. This hasn't been purchased, so right now the fees are just going to be the same as Uniswap. It's always at least as many fees as you're making in Uniswap, because this is just a LP position deployed into Uniswap. But it has the potential there for someone to
Right.
buy it up and really increase the fees that they'd be getting compared to the Uniswap fees.
Now, what type of user you think would want to buy a yearly put option for like the ETH USDC pool? Is this would it be just some sort of, I don't know, portfolio hedge, I guess? to have such a to purchase a long dated option like that? I don't know. I'm asking you guys.
I would say that the buying of a yearly put is like for not even day trading or weekly trading. It's like risk management 101 almost. So if it's in part of the trading competition on base, I would not expect anyone to buy this for just that hedging kind of hedging appetite. You could, if you click, so there's like 0.18, it's not much, but you could buy that wide liquidity and concentrate it, which is removing some of that super wide one and moving it to a very, very narrow range. This is a calendar spread. Now I think it maybe my Guillaume Lambert made me try this, but that's another type of trade which is very capital efficient, and you're paying a tiny bit on the wide end, which is the yearly, but you can earn weekly type of returns. And then you'll have to you click the 1 year time scale and then select strategy for the put. This will mess up a bit the payoff. But choose the not long put but calendar spread puts.
Well, because it just makes perfect sense to me why I would sell
this
a 1 year put up, right? Like that makes sense to me, but I'm trying to understand maybe what would be the benefits.
Yeah, so that specific case is buying a very wide position and moving it to a much narrower range. And this is maybe classic,
right?
Izzy being the Uniswap LP. Uniswap LPing 101, which is capping your risks, impermanent loss or divergent loss, whatever you want to call it. Now, this position doesn't lose more than, again, maybe 20% or 10%, even if the price goes to zero, thanks to Steve's position that he sold. And even on mainnet, there's a little bit of options on the yearly time scale, maybe a bit of alpha. In traditional options, the longer dated options typically have a higher IV, meaning they have a higher risk, higher level of unknown, and they are priced higher. So on mainnet, even any yearly liquidity should be purchased maybe more aggressively than weekly and daily, because you also are paying on realize, which is lower than what it should be, and even more so than what the weekly ones would be. So the mutually beneficial thing would be if you have a low tolerance for risk, you sell yearly options. And if you know how to manage this, you buy these yearly options, different account, to move closer to the range to hedge your LP positions. And someone can buy that weekly to daily, from daily to hourly. There could be a whole chain of kind of calendar spreads.
Interesting. So what's the width of this? This is a yearly calendar spread, or is this just so that
you buy the yearly one, which is going to pay between whatever 1,000 and 4,000, but you sell the monthly one. Yeah.
There we go.
Yeah, of course.
Can you sell it even tighter
if you want?
Yeah, right. Sell it even tighter. Keep it open for an hour. I guess if you think that the price.
Maybe there's another churn. Maybe it leaves the range but comes back. But yeah, these are a bit harder to do. If you have a 1 hour that you can click, it's fine. But yeah, the weekly, and even me, I would say that I would personally do the buy the 1 year, sell the week. Yeah,
you do the week, right? And then would you close it after a week?
That management goes, I guess, time window is you won't close it before a week because the fees will be. I had a position on mainnet that was almost all green. So you see this payoff here. It's all red, but it would go up and up and up as you get more fees. You pay a little bit on the put side that you buy. You get 3 times as much maybe. So on net, you are moving up. But yeah, my dream is I did create one during the beta, during the competition. But yeah, create a risk-free butterfly, which is no loss regardless of the price, only profits. And that's a good place to be. Speaking of no losses, let's look at the biggest losers, maybe, or the those that seem to be on the wrong side of the trading competition.
Let's do it. So,
yeah, well, we saw one position that was rough, but because he's managing.
Yeah, so I mean, not only is the top volume trader, making some losses on some positions, but they're gaining back maybe in collateral or on other positions because they're actually in 10th place, which
And
currently is a solid, $100 and 100,000 pips. So
it's true. And if you really think about it, this one I think was 50-50, 50 E, 50 USDC. Price went up 20%. And if we do the math, they should gone 10% profit if half of their. So now the loss meant it's 8.6 instead of 10 ish.
well, they did
so,
good by depositing ETH. So.
Yeah, exactly. So if the price collapses, that's another story. But yeah, that's the the reason why everyone seems to be green is because their deposits going up. But yeah, let's look at the.
Yeah, so basically everyone over 10% is doing probably some trades that are well, unless they deposit.
I don't know if it makes sense to you could deposit and do nothing and just write the price, which is a fine strategy.
Well,
No, but maybe it should
well.
be like the extra stuff you make. Do we subtract?
I mean, it's a bet of what you want to deposit because part of the game is deciding which.
No, but do we? Yeah, okay, that's fine.
So if you don't care about ETH, you just deposit USDC. You can hedge all.
Yeah,
of
when
this.
it retraces back to 5% to 1,500. Oh my god! Okay, so poor.
So okay, this looks
35.
scary. You probably think, oh my gosh, someone traded it, got liquidated, lost it all. This is just an example to learn what not to do for the competition if you're trying to win. Basically, these users deposited and then withdrew. Basically, the way this P&L is calculated is we're going to count your deposits that you deposited throughout the competition. We're not going to count your withdrawals. So if you don't want to miss out on the P&L, don't withdraw because it will penalize your score. So that's one important takeaway. But let's look at maybe Lido Land here or Nickel Alchemist. We'll take a look at what they've done there.
I think you have to change your screen again. Yeah, awesome.
Cool. I mean, it's possible they withdrew as well, but we will see here in a bit why they're at the bottom here. So lots and lots of transactions. They first funded their account with $1,000, sold a put option that was quite large, about $3,000 size. They reduced it by about a fourth, and then took out some collateral and deposited more. So they've got a whole kind of series of transactions going here. Definitely the withdrawals don't help your score. So any withdrawal.
He withdraw and deposit. So he was switching collateral, it seems. Maybe?
Yes.
I don't know.
Which is normally fine, but for a trading competition, unfortunately, just to keep the metrics simple, any withdrawals is going to hurt your score here. We can take a look at some of these positions, though, if you're curious.
Some of these positions.
He did buy calls, I'd say. So he's probably making money back. So comeback story, maybe he's going to be able to climb back up. But this was 7 hours ago, maybe after the move. So
Well, he just did a. What did he just do? He just did a.
Maybe so.
Something?
Yeah. Let's
3 hours.
Let's see this. Well, this was their latest position, I think, or actually one of their latest positions. So
back where it started, 23.48 price at mint, 23.48 current price.
Lucky
it was out of range, but they don't pay anything. Interesting. Yeah.
Yes. And then we can take a look at this straddle that was 3 hours ago.
Mm.
Yes, too new of a position. So
very bearish.
Yeah, but so what do we think?
No, very bearish.
Slightly
like
bearish.
100% delta. The it's out of range. They are tapping into maybe the call action if it goes back in range, but this is maybe a lot. We've done a few of those with Rosely, but this is very directional. But then you want to kind of maximize your P&L from the Streamia. So they are bearish, and instead of buying a put and paying out, they are setting a straddle that's offset from the current price. And if you see the max profit happens around $2,000, maybe that's their price target. Maybe they know Vitalik, and then they say, hey, okay, he's going to bring the price back down. So that's another type of trade that is directional, but it's a buy side but sell side. It's directional, but also harvest the volatility.
Yeah, I think this is actually a pretty smart trade for what they want to do, because if you're thinking, how do I win this contest um, at the biggest size, and I think the price is going to go back down, as you said, then ideally you'd want kind of full delta exposure, like the biggest gain for the price moving down. And so, as you said here, they're out of range, and so they're going to make $1 for every dollar that it goes down, multiplied by the contract size, of course. But then once it goes back under about 20, what is this, 22.40, then they're going to start earning fees. And right now they're actually well positioned, because this call option that they sold is rapidly purchased up by other people, and so they will earn 170% more fees than they would normally in Uniswap. So it's kind of a nice benefit as the price moves down, and then get some extra premium as well if it actually goes down for far enough. All right.
See, even our worst traders.
No,
doing
I think
pretty
that's
good,
because of the
so.
withdrawal, and maybe that's also the.
No. Yeah, exactly.
Yeah, let's go somewhere that's about zero.
So,
If you do
but still,
zero, then it's definitely a bad set of trades, and unless maybe
Look at
the
one girl.
CB. Yeah, let's
She's
see
just a girl.
I know,
it's
maybe.
me. I'm just kidding.
CB. Wait, what's CB.ID? That's the
It might be a
Coinbase wallet.
Coinbase wallet,
Okay.
but it's actually just B2B. So we'll take a look while this loads at what onegirl.cb.id has been doing. Lots and lots of sold options, and high frequency of them. Just in the last day, it looks like they've traded 1, 2, 3, 4, 5, 6, 7, 8, 9, almost 10 options.
What are these blanks mean? They're withdrawn?
Was that?
No. What are all the blanks? Is that
It's
just them
deposit. There's
adding more
a
deposits?
small little icon that shows the type of deposits. I think this could be a slightly different color, but there's no concept of PNL or token ID for these deposits. So that
Great,
mint and
because
burn and mint
money's
and
coming
for the
in.
burn seem to be losing a bit of money, and then that would imagine that's why PNL is kind of mid, but yeah.
What are they doing? Selling a bunch of put options?
So you got some sold puts here. You got some sold strangles. Is there any one you want to look at in particular?
There's nothing. The first one might be the loser, because there's nothing that is inherently bearish. Like the strangles, they've been closed, but it's not big. So let's look at the first one that was open.
But they've also been putting these positions in, kind of after the biggest price increase.
I see.
It was a day and 5 hours ago, so I think they might have caught the tail end of some things. Sorry, which one did you say you want to look at?
Oh, I mean, if you look at their go up in the open PNL, I just want to see the open positions, the chart. I'm a charts guy, but I don't know. If you go down, scroll, I want to see what the biggest loss comes from. Or maybe it's because they mostly have USDC, so they did not benefit from the ETH appreciation.
Good point.
So that's why it's slightly positive, because everything's green and the losses weren't huge. But it's the collateral composition. So if the price were to go down, a lot of these accounts may see a negative PNL, but then that user will have a more stable one.
Yeah, but so we can take a look with the deposits, what they're kind of at, and that's right. This doesn't affect them too much because they have very few ETH deposits, and so overall their kind of position is just dependent on their open positions rather than their deposits.
Well, I mean, I guess it's a fair, right? If you think about it, if we're doing a trading competition with ETH USDC and ETH BTC, and I don't really like to hold ETH, right? Like, how can I partake in this competition in a way that I just don't care to be exposed to ETH.
Yeah, exactly. You're going to fund it with the
So,
stable
like,
coin, and then you can really from there decide, do I want to be bullish or bearish ETH, and make the trade. So it's really a good way to be neutral.
maybe delta neutral, I guess. I don't know.
And if you deposit ETH, then you know that you're
Hey.
already biased in the bullish direction. So anything you add to that is going to either hedge that or increase further ETH exposure. So that's an important thing to think about when you
Right.
enter these contests. All right. Well,
Yeah, I guess maybe they can do some sort of delta neutral or something, some sort of. I think you said that they did just open up a strangle or something, right?
yes, they did a couple of strangles, I think. Probably just trying to harvest some of the fees here.
That's what I'm thinking, right? Because I'm trying to think what I would do if I just don't really care to end up in ETH. I guess I don't know. I guess I would maybe.
No, I mean, if you have only USDC as deposit, it's a bit easier to keep track of your PNL because you're like now you can be extremely neutral, but you don't have to worry, quote unquote, with the exposure too. So, like most trading accounts, is you start with cash and then you don't even have to worry too much about collateral. But yeah, I mean that seems fine. It's just a fee harvesting. I like the selling a bit more for sure. Yeah, it's good.
Yeah, honestly, solid strategy. Even our worst have been doing quite well.
Yeah, that's what I'm nice to see, I guess, right? That's pretty cool. So what is this slightly bearish, this one, or where are we at? I can't.
Yeah, the whole position was a bit bearish, I think.
So maybe they're just trying to stick around, and I guess they're taking a slight stance on that and just trying to harvest the volatility. Interesting. Listen, girly, you're doing fine.
Right, good job, one girl. I mean, you're still in, like, even right now, you're in the leaderboard. So, if you were to deposit $100, which is the minimum right now, you'd still be winning 25,000 points. Because top 50, we're giving out prizes to a lot of people, and the price tier goes all the way up to $1,400 for first place and 1,000,000 points, as well as $700 for the highest volume. An adorable jumbo bird, and 1,000,000 points. So do join the base trading competitions. Extremely low gas fees, very nice. You can fund it directly from Coinbase or Bridge Over. We have all of the instructions on our site. Just visit panoptic.xyz/blog, and you'll see kind of this base trading competition is live. It has all the competition rules and instructions on how to participate. It's very easy to get started. You just need to deposit $100. It can be ETH, USDC, a mix of both is ideal. And you still have over 9 days to join the competition. So, but don't wait. Join now and start competing and fighting for these prizes. We'll go over kind of the best and worst traders again next week, and we'll kind of feature some of these trades and see what has been working next week. But do you have any advice? Not financial advice. Nothing we say here is financial advice. Do your own research. But do you have any advice for our traders going into the weekend? I think everyone has done pretty well overall, capitalizing on the latest price gain. But from here, what do you expect to see going forward, and how can people prepare?
I think the weekends are definitely more quieter. There's not a lot of trading like on spot, and the price moves typically is not moving except in the rare instances where there's a huge announcement or a bullish or bearish tweet. And the key point is that the crypto markets being open 24/7 are the ones that are kind of telegraphing some of that. So one strategy is if you expect there's a lot of uncertainty and maybe latent pent up craziness that could explode, then I would buy straddles, which is both benefiting on the way up or down. And if you just want to harvest some funds, just be risk on without being directional, can sell a straddle. Maybe that's the two simplest way to think it. Do you want to pay a little bit to get extremely high upside, or you want to get paid if you think the market's not going to move much?
Makes sense. And we've seen that purchasing options so far has been relatively cheap. I think we have a lot more options sold. I do think I'll disagree with you a little bit on the sell strategy. I think selling in general is a good strategy, but if you're trying to get to the top of the leaderboard, make the most, you probably want to have some directional exposure. Of course, then it's a 50-50 chance because either you're right or you're wrong. But if you're right, you're going to go up the leaderboard. If you're wrong, you're going to go massively down. If you're selling straddles, you might earn some fee income and kind of float maybe hopefully where you are. But there is some risk that you drop if the price does go way up.
Yeah, that's right. If you want to win it, definitely the buy side is a good way, because the fees you get in a week could be 5%, maybe 10% if it's very volatile. But yeah, that won't be 90% plus profits for sure. So yeah. Or you can sell these super wide options and be directional. But yeah, I'd say that the price moves, if it's a omnidirectional move where you don't even know where it's going, then it's hard to be on the sell side and make profits. That's why you can buy straddle. But if you're bullish or bearish, you can sell a in the money call, in the money put even, and get some exposure too. But yeah.
I mean, what's the other pool is the ETH BTC pool?
BTC USDC pool, but it's not part of this trading competition. So we'll see after this trading competition. Maybe we'll do some future competitions. We can include some other markets. Bitcoin did just hit over 100K, so lots of excitement there from the traders and institutions. Lots of funds flowing in, I think, into the ETFs as well. So definitely huge interest there. So it's not part of the incentivized prize pool this time, but it's it is incentivized with our points. So if you are trading Bitcoin options there, you are receiving points as well.
Yeah. Well, I'm just laughing at the because we were talking about it on the previous one of the ratio between BTC and ETH, and it has taken a sharp.
See. That's right. You zoom out.
When you zoom out, it looks just
50% down, and you have a small little spike. But yes, no.
But in the last month, up 20% though. So it's like, that's why these monthly options are great. But cool.
Oh, that's right.
The world of options.
There we go. All right. This is good. Thanks very much, everyone, for joining. And yeah, maybe everyone is equal here. Or
yeah, happy trading.
Exactly. Happy trading. Go win this plushie if you can. But yeah, that's great. I'll see you everyone on Tuesday. Yeah, there we go.
It literally looks like a lip filler.
Quack.
All right, so this is how we end this. Wait. Put the face in, and yeah.
That's the point.
Hello, everyone.